Hey, what's up, my friend? So in this video, I want to share with you a trade, right, that I got it wrong, big time from the start. So this is a trade, right, on Pound Aussie, the daily time frame, and I just want to share with you my thought process to why I took this trade. So you can see that the price pretty much came into this area of resistance over here. Over here, price came into this level and it got rejected, right? You saw this bearish reversal pattern at a nice fat round number of 1.8 at this obvious market structure resistance. So when this occurred, right, I told myself that I want to get short because, I'm against this obvious market structure. So I'm going down to a lower time frame, the 4-hour time frame, to look for a entry trigger. So I went down to the 4-hour time frame. Okay, and for those of you who have followed me, right, you know that I like to look for a weak pullback on the lower time frame, telling me that the buyers are unable to push price higher. So this was the market structure I was looking at, right? A strong move higher, and then you have this strong reversal, and then this weak pullback showing you that the buyers are unable to push price higher. And then on this candle over here, the price, this red candle over here, the price break and close below the low. So I went short. Have my stop loss, right, 1 ATR above this highs, 1 ATR somewhere about here. Okay, and I went short. And as you can see, right, at this point in time, boom, I just got stopped out. The market just rallied against me, and I took the loss on this trade. Now, at this point, right, I want to say that, I don't regret taking this trade, right? Yes, I am wrong on this trade. The market has proved me wrong big time, but I have my stops, right, in place to kind of, contain the losses. But what happens is that, what if you hesitate to take the loss? What if you are thinking, let's say, for example, at this point in time, the price is now back at resistance. And many of you, right, many traders will look at this and say to themselves, hey, the price is at resistance. Why do I want to cut my loss now? Maybe the price could reverse from here, right? And I don't have to take a loss. Okay? And what happened is that if you hesitate to take a loss, if you don't follow the plan that you set up for yourself, what could happen is that loss snowball into a bigger loss. For example, boom, market broke out of the range, and now the original loss that you had has grown into something bigger. Let's say you were initially risking $200 on the trade. Now it's snowballed to like $500. Okay, and you might think to yourself again, have the hopes that you know what, I will wait for the retracement to come and I exit at a smaller loss. So maybe instead of having an open loss of $500 now, you wait for the retracement to come, like something like this, a retracement, okay, and see if the loss gets smaller before you exit the trade. But trust me, if you do something like this, right, again, your hope will get in the way. And the only time you exit the trade is where you cannot stand the pain any longer. In this case, boom, breaks out again, right? Your $500 loss is now snowballed into $700-800 loss. Okay? So the point I'm trying to make over here is that when you have a stop loss, right, when the market has proved you wrong, like it did to me, it proved me wrong, adhere your stop loss, respect it, and get out of the trade. Okay? This is important. So let me share with you another trade that I took, right? And the market proved me wrong again. Right? Dollar against the Norwegian chrono. So let me share with you the thought process of this trade. So this one over here, if you look back out, right, this market actually came into this. Okay, let me just adjust this slightly on this level here. Okay, I zoom out. All right, so you can see that this market, right, you just look left, right, came into this obvious structure, this previous resistance that could act as support, right, over here. Okay, so again, right, at this point in time, where I got long is at this juncture, right, somewhere about here. I noticed that, hey, support seems to be holding up pretty well. All right, so I want to look for a long setup. So I went down to the let me look at the daily time frame analysis first. That's where I want to explain my thought process. Now this is what I was referring to. Okay, market test the previous resistance, now act as support on this daily time frame, and I noticed that price is at this attractive level and I want to get long. So I went down to the 4-hour time frame, similar to the Pound Aussie trade. I went down to the lower time frame and looked for a break of structure. So over here, I noticed one thing. This market, right, seems to be forming a bottoming pattern, right? You have a lower low, lower low, and at this point in time, right, you now have a higher low. Okay, higher low. Another higher low, right? Higher low, and now you also have a higher high. So I look at this, and I was thinking to myself, hey, the daily time frame, it's in an uptrend. It's at a favorable trade location at this area of previous resistance turn support. And now on this time frame, I have a series of higher highs and higher lows, telling me that the buyers seems to have regained control, and I want to be long in this market. So I went long. Okay, in fact, I placed a buy limit order at this level because when the market closed up higher, I was being a cheapskate. I didn't want to buy at that price, so I placed a buy limit order, and in this case, I got filled right on the retracement. All right, I had my stop loss 1 ATR below this low, somewhere about here. And in this case, again, I'm just trailing my stop loss right on the daily time frame. So I wanted to write the daily swings. All right, so if you look at this over here, the daily swings, right, which is this one over here. I went long somewhere here and I wanted to write this daily swing. So I'm trailing my stop loss right on the previous day low. So if the market breaks and closes below the previous day low, I'll exit the trade. So what happened is that this candle came, right, and it pretty much break and close below the previous day low. And I had a loss on this trade as well. Okay, so you can see that pretty much my open profits got vaporized and even suffered a small loss because of it, right? I had a loss of 0.14R on this trade. Okay, so another loss, market proved me wrong, didn't want to swing higher, swing a little bit and then reverse back, bam, right? Hit my trailing stop loss and I got stopped out of this as well. Again, the lesson learned is that, when you have a plan, you have a stop loss, right? Adhere to it, right? And just take what the market gives you. So let me share with you another example of a trade that I took about taking what the market offers you. So this is a trade of silver, all right? Silver. Okay, let me share with you my thought process again. So this time around, I'm using the 20 MA as a so-called resistance, dynamic resistance, right? Because when I look at this trend, market is in a downtrend, okay? And what happens is that, as I've mentioned, right, when the market is in a strong downtrend, seldom, right, would you get it to, retest previous support term resistance. Seldom would it come back to retest, previous resistance level, right? So you need to have a different tool to kind of help you define your dynamic support resistance. And in this case, in a strong trend, the 20 MA, right, is useful to define this type of dynamic resistance levels. So in this case, I saw on the daily, price bounce off the 20 MA. Got rejected. Again, this is an area of value on a trade from. I'm trading with the trend and now I'm just looking for an entry trigger to go short. In this case, I went down to the 4-hour time frame as well. Okay, and I saw this, right? Same old pattern. Lower high, lower low, because I'm looking to short, all right? I want to see a series of lower high and lower low before, or rather to let the market tell me that it's about to reverse lower. So in this case, price broke down, from a wick pullback. Right now you have a lower high and a lower low. Price break below this swing low, I went short. Stop loss again, 1 ATR above this highs. And in this case, right, again, I'm just going to write a swing on a daily time frame, trailing my stops on this daily time frame, and take what the market offers me. Same thought process. So in this case, on a daily time frame, you can see that I got short here, right? Somewhere here, right? And I just trail my stop loss, right, as the market went lower. So if the market breaks and closes above the previous day high, I'll exit the trade. So as you can see over here, that pretty much allowed me to write this downward swing, right? And I exited here. Boom, right? You can see break and close above the previous day high. So in other words, I did capture this one swing over here, and I'm just taking what the market offers. I'm not trying to force anything out of the market, right? If it gives, I take. It doesn't give, I exit. Simple as it is, okay? And at this point in time, the market now is possibly showing signs of reversal. I could have made more. That's right. If I did not, follow my rules, I could have made more. But at the same time, the market could have reversed, and I could have lost more. So you can see that trading is all about balancing your risk to reward. You never know how much the market will move in your favor. You never know how much the market will move against you. All you can do is to have a set of rules to play good defense and to take what the market offers you. So the 3 trades that I shared with you earlier, the first 2 are losing trades. It hit my stop loss. I'm just protecting myself, protecting my downside. And this third trade, right, when the market decides to give, I take what it offers. Okay, so this is the lesson, right, in today's video, right? I am wrong. But you don't have to be right on every trade to make money in the long run. All you need to do is to protect your downside and then take what the market offers you. Okay? So with that said, right, let's move on and talk about a couple of trading setups that I'm looking at this week. Again, same principles that I've shared in my weekly, or rather the market analysis that you're seeing now for months and years. Okay, the next pair, let's have a look, is platinum. I think it's worth looking. Platinum, where are you, my dear? Here. Okay, so platinum, right, very similar to silver. Market is in a downtrend. If you pull out your 20 MA, I think this one more respects the 50 MA. Yep, somewhere around the 50 MA. Okay, price came into this previous support turn resistance. Again, now you have what we call a false break. Price breaking out above this highs and then reversing lower. You can go short over here and have your stop loss, right, 1 ATR above this highs, which is just slightly beyond the 50 MA as well. Alternatively, right, if you want to be a little bit of a cheapskate and get a better entry timing, you can look at the 4-hour time frame and see where is a logical place where selling pressure might exist, right? And if you ask me, I would say this level over here, previous swing low that could act as support, this is where there might be selling pressure lurking around. So you can place a sell limit order again and have your stop loss 1 ATR above here. So you can see that if you place your sell limit order around here, you're getting a slightly better entry. Okay, and how would I manage this trade? Same thing, right? I'm just going to take what the market wants to offer. So in this case, I'm going to trail my stop loss, right? If the market breaks and closes above the previous day high, right, I'll just exit the trade, right? Because it's telling me that, the buyers are coming in, there is sign of strength, right? I will bail out of the trade. Alternatively, right, for those of you who wants to ride the longer term trend, you can trail your stop loss, right, on this 50 period moving average. Notice if when you look back, right, the market has not break and close above the 50 MA for quite some time. So this is a level that you can reference to set your trailing stop loss. That is perfectly sound as well. So I kind of leave it to you depending on your trading goals, how you want to, manage this trade. All right, this is platinum. Another trade that I want to share with you is the pound against the Swiss franc. This one over here, right, you can see that this market is in a downtrend. Okay, in fact, there is this minor structure over here that I didn't draw it, but you can see it over here, right? Tested once here, okay, and then here, second time, and then third time over here. But what's interesting is that if you look at the 4-hour time frame, right, there is a chart pattern that is showing you signs of weakness in the market. This is a chart pattern, is what we call the descending triangle. All right, notice that there is lower highs coming into this area of support. This tells you that the buyers try to push price higher, but keep getting smashed down lower by the sellers at lower and lower prices. So now the buyers are kind of constrained. They're pushed into a corner. And if you ask me, right, there's a good chance that this market could break down lower. So what I'm looking for is for a break and close below this area of support. If it does, again, I'll go short, have my stops 1 ATR above this high somewhere here, right, and try to ride the downward swing, right, and see, and to take what the market offers. If it's not going to offer anything, I just bail out and say sayonara, thank you, and I'm out. See ya. Right, so that's what I'm doing on this pound Swiss franc trade. That's the setup that I'm looking at. Okay, so these are the couple of trading opportunities that I feel that is worth watching for this coming week, and hopefully the first 3 trades that I shared with you are good lessons to kind of ground you into what you should expect from trading. So with that said, right, I have come towards the end of this week's market analysis. If you have enjoyed it, right, please, right, hit the subscribe button below. Just click on it, click, right. Hit the like button. If you have any feedback, comments, questions, leave it in the comment section below and I'll get back to you. Alright, so with that said, I wish you good luck and good trading. Until next time.